Hello friends, in this video we will take another look at EURUSD and I'll show you a few more tricks how you can predict the price moves using the sentiment data. Is quite a reliable tool. So let's take a look at the EURUSD. If you notice, every big move in EURUSD is preceded by so-called position switch. That's how we call it, or accumulation switch. Let's take a look. You see this big move, which was a move of 241 pips, was preceded by this position switch here. Look at sentiment data. For a brief time, the bulls went over the red. You see, they changed the dominance. The dominance was changed just for a brief time. After the first crossover, second crossover, we could go long until where? Until the next high, or here it took two highs. You see, because after price takes the high, the number of positions and lots among the retail traders change because they close their positions or their stops are hit. So you can safely target the previous high when you see the position switch or accumulation switch phenomenon. Like here, I just even put white lines here, and you can clearly see that each time we have the position switch, price goes up. So the first crossover is a sign. You can actually enter, if you know that price is going up, you can already enter on the first crossover long. But it's better to do it somewhere in the middle. Because if you enter on the first crossover, you might hit some drawdown because the price is still can still keep falling. So it's better to enter when you see the hook. You see, when you see the hook is exhaustion hook, like here. It usually happens at night for some reason. I don't know why, but I noticed that those hooks, exhaustion's hook, take place in the night after American session is over. You often have this position switch. Maybe people close their positions for the day and go home, and that's why you have those position switches in the night when the new days hit before 8 a.m. in the morning when Europe opens. So you have those position switches very often. If you see this position switch taking place at night, it's a sign that there will be change in trend. Now I'll explain you why. I had two long positions open, but I exited right here at break even, so I didn't lose any money. And I will wait for something else to happen. I'll explain you why I closed it. Because you see, when we had this position switch here on the 18th of April, well, my guess of course was that the price will shoot up, that the bears will shoot up and will break 110. But since we are at 110, I will even mark this level. 110 is a very significant number. It's a round number, psychological number, one of the most important in Euro. Since we are at 110, price often tends to accumulate at 110. So it's not so easy to break through this level. We poke it through already twice, but we are accumulating now below 110. So I don't think it will be so easy break like this when this is flat. There will be another accumulation switch, and it should be at least as big as this one before price can make it through, or as this one. Right now, to go long doesn't make sense because price will drop. You see, before going up, when you have a flat market like this, price never, very rarely, just goes up like that. It usually drops below for some 50 pips before it continues up, just to make sure everybody stop it out. This is called Phorexia signature pattern. There is a school, online forex school called Phorexia, and they I noticed this pattern in a price. When the price makes this kind of a triangle or a wedge, then it drops down and continues up. So we see here it was also flat market, but price didn't go up straight. It dropped down 60 pips before it went up. The same here, it won't go up so easily. And another proof for that we don't have any position switch, big position switch, which will take place. Once I see the position switch, then I will be ready to go long. I will be going long because we are still there in the bearish dominance, which means price will go the opposite to that. So, but I will wait for a pullback of at least 50 pips. Most likely will go something like this down, maybe even 100 pips. I don't know how much, but you can draw a trend line. You can see that we are still haven't made it quite to this trend line. We can make a false break. You see, as often price makes, just breaks through the trend line. False break before it even goes lower than this. So it's somewhere here, trend line. So we can even poke through down to stop. Even maybe we will take even this low. Probably will be taken. This low here. So we will poke down, and when I see the position switch, significant position switch, because these touches, they do generate small moves, like we had this touch. When I saw this touch, I thought I have to get out because it was so tiny touch. I knew that after such small touches, price doesn't move very much. So I knew that this touch will generate the move which will take the previous high, tiny high here, tiny move. So because my positions, long positions, were closer to the top here, so it was good for me to exit before I will experience drawdown of 100 or 50 pips here. That's my guess, because it's pretty obvious that you see, if you go back in sentiment data, you will see that every single big move was triggered by the position switch. You see here, bulls briefly go above the reds, make a hook. It's like a contract deal or some mutual agreement, trading between traders taking place there. Some positions being closed and opened, and which generates those moves, big moves. So it's the same with bearish downtrends. The same thing happens. Here it was kind of different. Well, we had a position switch here, you see, which generated all this big move to the upside when the previous highs had been taken. You see, I mean here, yeah, we had this position switch here, which was responsible for this move to the upside. And usually when you have the position switch, very often you can see on lower time frames W or M formations. So we can even trade those W formations like this. You can go double bottom or double top size up. But here the previous highs had been taken. You see price generated very significant move. For the rest of the months there was no position switch, because bears maintained it at high levels of trading and price was just driven up by simply bears staying at the high levels. They were not, their positions were not dropping much. And by the way, it's better to use positions feature in Myfxbook Outlook Indicator to analyze this position switch, because we can use positions or lots, the graph for positions or lots. So this is positions because there is more detail in the positions data in Myfxbook Outlook Indicator. So it's a kind of a big secret I'm revealing you, because this will really facilitate trading of anyone who studies this. Here you see You can call it a crossover, but it's not a real crossover because you have a double crossover. You see, it's a kind of, if you would go here, because you see the bulls are going up, so it means you have to go short. It would be you would be going in wrong direction, so it's a double crossover. You have to wait for the second crossover and then you go on the opposite signal up. But very often the second crossover comes pretty late. Well, not so bad like here. Not so bad, and you can target the previous high, which was taken like to 200 pips, which is a significant move. So you can go on the second crossover, which is safe, or during the hook. Well, the hook, yeah, you can go when you see the hook. Very often it is a good idea, because then you really catch the bottoms and tops when you go on the hook. So the same thing happens on the move to the downside. You see we had a position switch, double position switch here before this drop. We had two switches. The interaction was taking place here, transactions closed, opened, and then we had this big move down. And you see it was taking place after New York closed at 5 o'clock GMT about. So it's always happening, the same thing here. Or you can see when those two lines are very close, it's a signal that there will be a reversal or a good sign to enter when at least those two lines touch each other. Like here you see they touch each other, and it's a signal to enter. So here we had the position switch, you see, and also before the big move. Here we had the touch before the drop. You see here the bulls were dominating, prices going opposite always. So, and here we had the touch of both lines, which generated this big move down. Here we had another touch, which also was responsible for this move down. Here we had the classical position switch or accumulation switch, big one, which was responsible for all this move down of 367 pips, can you imagine? So here we had another position switch, which was responsible for the move down of 182 pips. You see here, the previous low was not taken. It was not taken because price was at 110, which is a round number, psychological level, you see, which often acts like a wall. But the fractal was formed here, you see. Price came down to the base at least and filled this inefficiency to the upside completely. So we can use Chris Lowry teaching on fractals also and gap fills when you doing this trading. Also, it's good to know those things. Here we had the position switch also, which was responsible for this move down, and here we had another position switch, which was responsible for this move to the upside. So here we had another position switch, which was responsible for the move downside move, another position switch. It's either the touch or the switch. You either see the touch or the switch. In the recent period of EURUSD trading, we had quite big remove objects. Let me remove all those objects, and we'll just remove to have a clean chart, so it's better to see. Yeah. So just here you can see obvious position switches. This one position switch here before the big move up, position switch here before the move up, the big position switch here, sharp move up and down. If you see such big position switches in a short period of time, they can generate significant moves. Also here the big position switch and another big position switch, which didn't generate a very big move, surprisingly, but the previous high was taken. And that's how it works. It's kind of more complicated when you do have too many touches and too many position switches. That's usually big reversals taking place, and it's after NFP or interest rate decisions. But overall, if you add period separators, for 1 monthly period separators, so make them white, you will have an idea of the dominating force for per month. Also, if you add, let's change it to lots now, because we are at positions. Can change to lots and at the horizontal level of 6,000, because right now it serves like trigger level. Yeah, you see here now the bulls are staying below 6,000 lots. So I will wait for the bulls to break above 6,000 lots, at least briefly for some time, because that is a prerequisite for any significant move to the upside. They need to break up, make the position switch at least for some time. I doubt that the bears will continue up without the position switch. So we are likely to see the congestions going on as long as there is no position switch. If we see a big position switch as those 1, 2, 3, 4, 5, 6, 7 last position switches, which were quite big, the last position switch didn't generate any big move, which was a sign for me that the price will not continue at the moment higher. It will take some time after some retracement maybe. And we look on daily, it can be on daily, what do we have? And the weekly, yeah, we are quite extended, you know, and it's hard to say where it can pull back, but yeah, this Malaysian SNR level wasn't quite touched. This Malaysian SNR level was touched. This Malaysian SNR level was not touched. You should also study Malaysian support and resistance when you trade, because usually this one was not touched, Malaysian SNR, so we might pull back down here even 90 pips to retest this Malaysian SNR level between those two candles. That is called Malaysian SNR, and it wasn't touched. But here it was touched, you see, retested. Here we didn't have a retest. Usually Malaysian SNR levels work pretty good. Here this Malaysian SNR level was tested twice even. And let's look on monthly. Yeah, here we had a reversal at this Malaysian SNR level. On Malaysian SNR levels, you should watch IKFX videos. He teaches this pretty well. And you see, we had the reaction here at this Malaysian SNR level. And the next Malaysian SNR level is here at 112 on a monthly chart. So this Malaysian SNR level was not tested. price continued without testing it. Also, this one was not tested. This one was not tested. So hard to say where a price will pull back. Very hard to say. But we will see it immediately. You see also on daily, you see that the bulls are kind of gearing up. They will make another hook here on daily sometime. Maybe even next week we will see this retracement. Because there is also time frequency at what periods they make those hooks. So it's like, if you look to the forward, it looks like 24th of April, maybe next week. Next week we are likely to make another hook, after which we might see the rise, the accumulation switch, because after this accumulation switch we didn't see any rise at all. You know, it usually goes immediately up. So right now those two flat, so we will wait for another hook, and which should trigger the bears into their positions, short-in positions, which will generate price going up. So I hope you understand my point. At the moment you see bulls are staying below 6,000 lot, that is their home, and then they will stay for some time, obviously until the end of the month. But they will make another push up, like this, you see, generating some retracement of another 100 pips maybe from here. We will create this Phorexia signature pattern, and we will go up from there, I guess. So that's my analysis for today. I wish you all the best.